What's all this business about gold bar levels?
In this video, I'm going to provide you with a step-by-step guide on how to pass funding account challenges. Now, I highly recommend you go get yourself a notepad and a pen so you can pause the video and then write down these hacks as I give them to you and implement them in your own trading. Now, it's important to say there is no point doing a funding account challenge unless you have a proven edge. Social media traders will have you think that trading is 80% about psychology and that all strategies work. This is completely false. It doesn't matter how good your psychology and your risk management is. If you don't have a proven edge that works in the long term, you will not be a consistently profitable trader. So make sure you have an edge first, and then once you have an edge, passing these account challenges is easy, right? So as you can see, this is the recent challenge I did. It was a 100K static account with Apex, and these are the stats for this challenge I did. I had a 69% win rate, 81% of my days were winning days, and my average win to loss ratio was 2.6. My profit factor was 5.98. So what does that mean? For every dollar I lost, I made $5.98. Right? Once you have tracked your statistics either via back testing or via your live trades, and you know what your win rate is and you know what your average RR is, then you can determine whether you're a consistently profitable trader and you can start doing these funded account challenges. If you are looking for a proven edge and a proven strategy, feel free to join my time and price golden bullet mentorship. The link to that mentorship is below. Now, let's start from the beginning. I looked at Apex for my funded account challenge. Reason being is you can get a huge 80% discount on the prices they provide. If you would like my coupon code, there's a link to that in the description to this, and it'll give you 80% off. And if there is a 90% sale, it'll automatically give you the 90% off. Right? This is the cheapest challenge I could find, so it was a no-brainer for me. Now, there are basically two types of challenges. Okay, first you have to select your broker, whether it's Rhythmic or TradingView. I went for TradingView because I trade my personal funds with TradingView. So I was very familiar with the spreads, very familiar with the contracts that are supported. So it was a no-brainer for me to select TradingView with Apex. Once you select your broker, you then have to decide between the two types of challenges. So there are a lot of marketing tricks these funded account companies provide you with, okay? So these full challenges typically have a trailing drawdown, okay? Now, what does a trailing drawdown mean? It means as your equity curve rises, your max drawdown also increases. So let's say if you take a trade and then it gets close to TPing and then reverses and stops you at break even, there's a negative impact to that because your trailing drawdown would have risen along with your rising equity curve. And the issue as a trader is, first, it's another factor that you have to start tracking. You have to start tracking where your trailing drawdown is. And then with Apex, it's not the easiest number to track, okay? You have to really dig into the various back-end GUIs to find that number. It also puts unnecessary pressure on you because you may have calculated your risk based off of the drawdown that you have, but then suddenly you have a runner that you let go and you let run, but then it reverses on you, and that will have a negative impact on you both psychologically and within your trailing drawdown. So I went for the simplest challenge they have, okay, which is the 100K static. Okay, with the 100K static, you know exactly what your drawdown is. So even though it's a 100K account, your drawdown is only $625. Okay, so I know no matter where I am in the challenge, as long as I stay above $625, I'm fine. And then the profit goal is $2,000. That makes calculating risk very easy. So the way I do it is you have to understand your system to such a level that you know what is the expected amount of drawdown I am likely to have given my win rate and my average RR. And you can use a Monte Carlo simulator to calculate that for you. So what I did was, these are some of my historical trades. So these are all the trades that I took for this challenge, basically. So I'll use this as my data. Okay, I know that my win rate is 69% and my average RR is 2.66. All right, so if I plug that into the calculator, 69% and a 2.6 RR multiple, I can then start understanding, on average, how will my equity curve rise? Okay. Now, given that the total drawdown is $625, I don't want to be risking, $300 per trade, because it only takes, 2 or 3 trades, my first 2 or 3 trades to be losers for me to get wiped out. So I wanted to ensure that I had enough wiggle room so that just in case I do dip into drawdown, it won't affect me psychologically. So I opted to go for a risk of around $100 per trade. Now, the issues with futures is you can't have an exact risk. Okay, it depends upon the contract size, it depends upon where your stop loss is, and depends on your entry. But I was aiming for an average risk of roughly $100. Yes, $100 trades look very, very boring, especially if you trade bigger amounts in your personal accounts. $100 doesn't make sense, but you've got to understand you're doing this to pass the challenge, okay, in the shortest amount of time possible and without failing it. Okay, you don't want to be failing challenges. It's just a complete waste of time if you fail challenges. Just spend the time to pass the challenge, get to the payout stage and get your payout, and then you can start scaling. So once you have decided that you need around 6 trades worth of wiggle room and you know your risk is $100, you can start understanding how your equity curve is. So using this Monte Carlo simulator, I plugged in my win rate of 69%, my R multiple of 266, and then my risk per trade is 0.1%, which is $100. Okay. These funded account challenges, they do use a lot of psychological techniques to influence you to fail. Okay, so even though it's a 100K challenge, it doesn't mean you should be risking 1K per trade. You shouldn't be risking 1% per trade because it's really your total drawdown that's the key. So that's why we only risk $100 per trade. So within this simulator, I entered my win rate, my RR, my risk per trade, which is $100. And I am saying, if I were to take this challenge 5 times, what would be this distribution of wins and losses? And this can start to help you understand statistically how your equity curve may rise. Right, so you'll see that the worst performing hypothetical simulation was this one here. There was 1 loss, and then we started rising, and this passed on trade 15 because the threshold is $102,000. The best performing outcome was this yellow one here, where we had a few wins, we had a dip, and then we passed on trade 9. Okay. I highly encourage you guys to put in your win rate and your RR into this simulator to see whether you are likely to pass the challenge or not. If the simulator doesn't show you passing the challenge, you need to do more work on your strategy, because having a true edge is the most important thing. Okay, so first point, you have to have a true edge. Right? A lot of traders have somewhat of an edge, but they don't understand when their edge will play out. Okay, so if you look at the distribution of my trades, I pick my days very carefully. I only pick the days that I think my edge will play out. Okay, so you don't have to trade every day. Okay, so you'll see that. Let's go to the beginning of the challenge. August. Okay. So I had a couple of test trades just to make sure that everything was set up properly, because I'm new to this whole setup. So these were just break-even trades just to get things going. And then on the first week, I didn't trade the Monday. Everything else was clean. Okay. The September is when I really honed in. So you'll see that for the first week, I only took 2 trades on 2 days with the 100% win rate. On the following week, you'll see I only took 1 trade, which was 100%. Then I had a week where, let's see, 1 loss, 2 losses. I had 2 wins and 2 losses. So that was a 50% win rate, but obviously my RR is 2, so I was up again. And in the third week, I had 1 break even. Sorry, in the fourth week, I had 1 break even and a passing trade. Okay. If you would like to understand the high probability days to trade, it's very easy to have a look at the days I'm trading, match it up with the economic calendar, and then you can start applying that to your own trading to find out when those high probability trade days occur for my specific strategy. Now, your strategy might be different, but for mine, I know the days I want to trade based on the news. So you can use the economic calendar combined with this data of my trading to give yourself a hack. Okay. Now, I also want you to start thinking about what are the, not only what are the days that are high probability for you, but what are the assets? So let's look at my trading stats in TradeZilla. Okay, so by symbol, you'll see that because of the times I was taking my trades, a lot of my trades, let's have a look. I wonder if we can break it down. Okay, there we go. So my best performing asset was gold, then silver, and then we had oil. And I didn't trade the index futures very frequently during this challenge. Reason being is I live in London, so I like getting my trading done in the morning, and the oils and the metals move a lot more. But it's important to understand what time your edge plays out and what assets does your edge play out for those times. There is always going to be an asset that you can trade based off of your available trading window. Okay, but you need to work that out for yourselves. Okay, and once you start collecting more statistics, you can see which assets are most profitable for you. Now, it's pretty much split for me. Okay, because these are basically oils, metals, and there's a few index futures. Did I have a win? I had a win on index future as well. I just didn't trade many of them. Now, another trick prop firms like to use is when it comes to a funded challenge, yes, they are very cheap. And if you use my discount code, you can typically get 100Ks worth of challenge for about $45. But that is a $45 per month reoccurring fee. Now, why do they do that? They do that to put unnecessary pressure on you to pass the challenge. So let's say you are only 1 or 2% away from passing a challenge, and you are a couple of days away from your $45 renewal. Psychologically, you are likely to be more aggressive with your trading just so that you pass the challenge before paying that extra $45 renewal. You have to ignore that. Don't think about passing a challenge strictly within 1 month. Just say, look, I'm willing to spend 3 months on this challenge. So it's $45 times 3. And this is the amount I'm trading, right? So don't try to pass the challenges too quickly because you are likely to rush and not take those A+ setups. So again, if you look at my trading, okay, I started trading the last week of August after these practice trades. Last week of August. And I really did pass it in a month. But because of the overlapping cycle, I was billed for 2 $45 renewals. Don't let that psychological renewal fee influence your trading, because you'll see that I was 1 trade away from passing on the Thursday. Okay, but I did not trade the Friday because it wasn't high probability for me. I did not trade the Monday, and I waited for the Tuesday. Okay, wait for your A+ setup to play out. Right? It's so much easier to stack your winning A+ setups and pass funding challenges than take your A+ and your Bs and your Cs and then constantly be in this situation where your equity curve is rising and falling. So if you have a look at my equity curve, I took my first loss and then it was pretty much straight all the way through. I had 1 loss here on the 17th and then we finished the challenge. Okay. Once you are a consistently profitable trader, this is what your equity curve should really look like, right? You don't want to be gambling. And you see a lot of people passing challenges in, 2 or 3 trades or even 1 day. These are just coin tosses that they're doing, right? They'll take one trade, hoping for like a 5-hour return, and if it doesn't happen, they'll reset their account and try again, right? Be disciplined to be a professional trader, okay? These are professional statistics. 69% win rate, 2 RR, average win-loss, okay, and then a consistent equity curve. And then if you break down the P&L by day, you'll see that 81% of my days were winning days, and I just had 2 losers, okay? Become a consistently profitable trader before you do these funded account challenges. There's no point throwing good money behind a non-strategy. Get yourself an edge first. I hope this helps. Use the Monte Carlo simulator in your own trading. Give yourself enough wiggle room so you can get into drawdown and then get out of drawdown, and wait for your high probability days using your high probability instruments at the right time of trading to pass these challenges. Okay, if you would like to learn my proven time and price golden bullet strategy, which works for Forex, index futures, gold, metal, oil, crypto, then there's a link in the description to this video.
What's all this business about gold block levels?